Hello, everybody, and welcome into Commodity Culture, where our goal is to make you a better investor in the commodities sector. My name is Jesse Day. Today is January 29th, 2026. Before we dive in, standard disclaimer: nothing here is investment advice. Do your own due diligence. My guest today is the Vice President of Exploration at F3 Uranium, a Canadian company exploring for high-grade uranium in Saskatchewan's Athabasca Basin. It's Sam Hartmann. Great to have you on the show.
Thanks for having me on.
Very excited to dive into the uranium market and F3 with you today, but let's kick things off first with an overview of how you see the uranium sector positioned here in 2026. As 2025 was a very eventful year, we're off to a great start so far. We've seen quite a dip in the equities today, but as we know, uranium is a very volatile sector. I wonder from your perspective what you see as the main catalyst driving the sector right now, and how much further do you think this bull cycle has to run?
Yeah, thanks. That's a great start. I mean, like you mentioned, I'm the VP of Exploration at F3 Uranium. So fundamentally, I'm a geologist and for a junior explorer, right, in the Athabasca Basin. So I'm most directly focused on finding deposits than, tracking every little market twist. But from what I've seen, I mean, 2025 was, you could say, a bit of a roller coaster for uranium. You had prices dipping down below 80 bucks a pound at times due to some Kazakh supply increases at the time. But overall, I think the sector has regained real momentum now heading into 2026. You've seen this morning, just today, the spot price hit, I think, 102 bucks a pound again, right? So this bull cycle that kicked off a few years ago, to me, it seems to be far from over. It's driven by real structural fundamentals that aren't going away anytime soon, and they can't be fixed in the very short term. So, the key catalysts right now, number one, probably just the global demand for power surging. Companies are recommitting to nuclear as a clean and reliable baseload energy source. You have bipartisan support in places like the US. And then on the supply side, you have, persisting issues. You have major producers are facing some setbacks last year, and that kind of tightened the supply side of the market. And then I think what's driving it what's driving the momentum in the immediate term is probably the AI and the data center hype, and that's adding some interest to uranium as a story, right? As these tech giants look to nuclear for power. So we see AI and SMR, these hypes, they're a bonus to the story. They're not really part of the baseline story. They don't have to be. The baseline story, just based on the supply deficit, it's great enough. You don't need it. But I do think in the short term, that's kind of driving the story at the very moment. And then, of course, you have, underinvestment in new mines, which has created this whole deficit to begin with. So, I mean, how much further do we have to go here in this bull run? I don't know. I'm, don't pretend to be a market expert by any stretch, but I don't see the fundamentals as something that can change in the short term. So as long as the demand keeps outpacing supply, it's a very basic story, right? And I would say if for the listeners that are interested in the story, for real market insights on the supply constraints and uranium market dynamics, I would encourage people to listen to the real experts here. And, that's people like Mike Alkin or Guy Keller or Grant Isaac from Cameco that, generously share their insights and research on podcasts. So I encourage people to listen to these guys too.
Yeah, absolutely. Mike Hawkins has been a guest on this show a few times. One of the greatest minds in the uranium sector, in my opinion. Now, I want to get on to one of the points that you made there, which is the two giants in the room, Cameco and Kazatomprom, facing production setbacks and guidance cuts. Cameco even discussing potentially having to go to the spot market to fulfill long-term contracts. And wherever you look around the uranium sector, we're seeing a lot of difficulties occur. If we're talking about coups in Niger, which is potentially taking some production offline, developers trying to ramp into production facing issues, Cameco and Kazatomprom, the two biggest players in the space, facing issues. How much of a constraint do you think this puts on global supply? And which new projects or restarts do you think could help close the gap in the near term?
Yeah, I mean, yeah, in 2025, you had Cameco cut its production guidance, right, due to some delays at MacArthur. And I think that was kind of down to 15 million pounds from 18. And that's not Cameco's share. Their share of that is a little bit less. Then in Kazakhstan, you had a similar story. They trimmed their production guidance for 2025. We're still waiting to see what their 2026 guidance. I think that there's all these little setbacks that together kind of work together and push the spot price up because it just highlights how fragile the whole story is. Um, I think that in the near term you have expectations on future production, but I think that you have to look at the surprise factor, right? I think that in terms of if you look at production coming online, the surprise factor will always be on the downside. Things will always cost more than you think they will, or they'll take longer, or probably both, right? The surprise will never be on the upside. So that I think that whatever gap you see in the near term is probably going to be even worse than what you project with optimistic assumptions. Basically getting at that, as demand is growing, you have these even small ripples globally in the supply side, and these will just widen the deficit. So in the near term, closing this gap is I don't think that can happen. It's not going to happen. So even in the US, you have domestic timelines are accelerating with new incentives, which can maybe bring some smaller projects online faster, but still, near term, which for most investors is probably 3 to 5 year window. I don't think there's any way to materially close this gap. So, and honestly, for shareholders of even junior exploration companies, these delays just underscore the importance of new discoveries, right? So, for example, in Saskatchewan uranium projects, if you look at the timelines, you have the timeline from discovery to planned production. That timeline often is greater than the proposed mine life, right? So that means the next generation of mines, we have to find these things right now, even before the next mines start production, right? Just to maintain that supply.
Now, one of the other things you brought up was tech giants embracing nuclear as a means of powering AI data centers. That's been a big story. Interestingly, we had a really bizarre event occur. I think it was at the beginning of last year when DeepSeek hit the market. We saw a big correction occur in the uranium equities. For some reason, investors really heavily equated the AI story with uranium, which I think it's an interesting piece of icing on the cake, so to speak, but I don't see it as one of the major. The supply deficit alone, as it stands today, we don't need AI data center demand. But I would love your thoughts there on how that's driving the narrative, as well as the SMR question, because that's a lot of companies developing SMR technology. Is that something that will bring demand this cycle, or is that something maybe more further out in the future?
I think it's a little bit of both. I mean, the AI nuclear hype is everywhere these days, right? You have, like you mentioned, the tech giants like Meta, Google, Microsoft, or Amazon. They're doing big nuclear deals to power their data centers. 2025, we saw Meta. I think they announced projects for some 6 gigawatts from nuclear, and that includes expansion and SMR developments with their partners like I think Vistra and Oklo are two of them. Microsoft revived Three Mile Island for data center power, and others are committing billions to SMRs. So I think AI's energy demands are massive right now. Projections say that these data centers could need, I don't know, somewhere like close to 1,000 terawatt hours by 2030 or something like that. And nuclear is, I think, a clean and steady fit that they can, justify powering these things. Is this a near term though driver? I think it's building momentum, but it's probably more of a mid to longer term play. Some of these deals are restarting existing plants, and that's probably adds demand in the short term. But things like SMRs, small modular reactors, those are the big hype. And realistically, I don't see that most of these will be online until 2030s or later. Despite these billions in investments. So I don't think SMRs will fully materialize, this cycle. And even if, especially if any of their timelines slip as they often do, But certainly they validate uranium's role in the future of energy. So for us as an explorer, we're focused on exploration, but we'll take any demand, tailwind that will help prices. We're certainly all for it.
Yeah, absolutely. I think just the narrative of AI and data centers and SMRs is certainly putting tailwinds behind the sector. I want to dive into F3 in just a moment, but first, I'd like to get your thoughts on the current administration in the US. They seem intent on ramping up nuclear energy generation. And reducing reliance on both uranium itself and conversion and enrichment services from unfriendly nations. How much of a driver do you think this could be for the Canadian mining sector, uranium mining sector in particular, given the high grades and established supply chain coming out of the Athabasca Basin?
Well, I mean, that's U.S. policy is a hot topic. I mean, I guess the question is if Canada's considered a friendly nation or not. I think that the current administration, I think they're pushing hard for nuclear expansion, right, to meet these clean energy goals, and they do want to reduce the reliance on uranium and especially conversion and enrichment from other nations. There's been the ban on Russian uranium imports, and there's now kind of these efforts to rebuild or build domestic supply chains and align with an energy independence, and that includes incentives, all kinds of incentives for new nuclear builds, right? I mean, for the Canadian sector, especially the Athabasca Basin, this probably be a solid driver as well. I mean, we've got the highest grade uranium deposits in the world, and we've got the established infrastructure, the know-how how to mine these things, and then a reliable supply chain. So I think as the U.S. looks north, for these secure sources, it'll boost demand, and the basin's grades make these projects very attractive, right? I mean, how big of a driver? I don't know. In the meaningful near term, it's probably going to depend on how these policies accelerate production timelines and how Canada fits into the picture. But Canada does remain, as a safe, high quality supplier.
Absolutely. I want to pivot now into discussing how F3 Uranium fits into the picture. Why don't you start by giving us an overview of the company?
Okay, so we're a junior uranium exploration company. We're focused entirely on the Patterson Lake District. So that is sort of in the southwest corner of the Athabasca Basin in Saskatchewan, which is probably one of the most prospective uranium districts in the world right now. And it's known for its high grade basement hosted deposits like Triple R and Arrow. And this region, this is the region in Canada that will be the next uranium producing district. And inside of that, you have Paladin and NextGen obviously are both targeting production for, late 2020s. Our flagship property is our 100% owned Patterson Lake North project. In that, we made a high-grade JR zone discovery back in late 2000 and 2022. That's been our main focus. We've been drilling to expand and better define that deposit since then. Just last December, we published the maiden resource estimate for that, and that came in at 11.8 million pounds at a average grade of 4.4%. So very high grade average grade, and that includes a high grade core of the deposit, which it really contains the majority of the pounds. So 10.8 million pounds at 12.2%. So that's very exciting for us, and it puts F3 into a different category of explorer, right? We're now the only company with a resource estimate in this Patterson Lake area outside of Paladin and NextGen. And then last spring, so spring 2025, we announced a brand new discovery, so completely unrelated to the JR zone. This is 13 kilometers south. We call it the Tetra zone. And delineating and this new discovery is probably our number one priority for this year. We're going to resume drilling there this early next week, so early February from this recording. And yeah, we're excited to see if we can really stretch this thing out and add more pounds to this Patterson Lake district. As a team, we have a very strong track record. We're the same group behind 3 prior major uranium discoveries in the basin, including the Triple R deposit, right just 12 kilometers away from this new Tetra zone. And that was recently acquired by Paladin. I think it was over $1 billion share deal, right? So for us, what we have is we have a lot of experience in this small area. We've probably drilled close to 1,000 drill holes in the area, and that kind of helps us have a good perspective and helps us with targeting in this complex geology. We've, as a company, we've also spun out a bunch of our earlier stage properties into a new company called F4 Uranium. And that was just to keep our focus tight on the Patterson Lake project. And the Patterson Lake project really is three core properties, right? And that is, Patterson Lake North is one of them, and then Broach Lake and Minto Lake. And, this is in the most prime ground near the big deposits like Triple R and Arrow. So, as a junior, we're always about exploration upside. And I think that we're going to enjoy doing it, in this time in a strengthening uranium market. Triple R deposit, when we found that was 2012. It was right after Fukushima. And we kind of had to develop the whole thing from discovery to feasibility, and, most of that in a bear market. So hopefully this time the tailwinds will be on our side, right? But right now we're an explorer. We're not a producer. We're not pretending to be. We're an explorer looking for the next big one in the best jurisdiction out there. So for our shareholders, it's the blue sky potential. We keep hitting good results at Tetra. Maybe we'll step out to some new areas altogether. And I think with the uranium sector's fundamentals looking very strong, we stand to create some significant value.
Great summary. Now, you've just announced that you've doubled the length of the Tetra zone, or more than doubled, I believe, on the Broach property to 135 meters. Can you walk us through the details and what they mean for the company moving forward?
Yeah, so I mean, typically these deposits are structurally hosted basement type deposits, right? What we were looking for at Tetra Zone, we were looking for something very specific. We had a box on the map, and we kind of said, in this box, this is what we're looking for. What we found was something somewhat different. Right now, what we're drilling is a dipping or plunging mineralized body. So it's kind of like at an angle. We can project that up to the unconformity. That's about 300 meters away in the up plunge direction. And what we want to look for is kind of what happens as we expand this thing towards the unconformity, because at the unconformity, we see a lot of very intense alteration that really stands out. So Tetra Zone, it's unique. It's not on a conductor. It has no graphite and it has no sulfides. So geologically, it's a lot different from what we typically look for. We were fortunate enough that we were able to find this thing anyways. But really what we want to do is put some size to it and do it quickly and kind of get us an idea of what this thing might be in the near term.
And you did mention a few highlights about the team and your experience, but maybe you could delve a little bit deeper into that and talk about the team behind F3 Uranium and how you're leveraging their expertise to move these projects forward.
Yeah, so I mean, I'm the VP Exploration. I was at part of the discovery team of Triple R, and I was there until from discovery to feasibility lastly as the chief geologist. And then we have our president, which is Raymond Ashley. He was there even before me. He's led the team to the discovery at J Zone. So that was fission energy, which then turned into fission uranium, which made the Triple R discovery, which then turned into F3 Uranium, which found JR Zone and now Tetra Zone. And then on the geologist side, we have two key guys, Eric Sen, he's our senior project manager, and Reed Stanger. And, these are kind of the up and new coming geologists that are taking everything we're teaching them and taking it to the next level.
And let's dive into the company's cash position at present. How much cash is on the balance sheet? How much runway does that give you? And how do you plan to raise capital as needed moving forward? Because obviously with exploration, some dilution is necessary, but I just wonder what your strategy is.
Yeah, I mean, that's, of course, dilution is necessary. As an explorer, we don't have any positive cash flow. We are always looking to markets in one way or another to raise cash. I think we've been fairly aggressive with raising money in the past, which led us to make these discoveries. Right now, our current cash position is about 20 million cash on hand. I think we're going to try to spend about 12 million throughout 2026. So we'll split it up into about 3 programs. So it'll be like a winter program, the one starting shortly, then a spring, early summer program, then a late summer to fall program. And so kind of like $3-4 million programs is what we're planning to spend. After that, we'll see where we're at in terms of results. But of course, at some point, we will have to raise more money for more work. But we're trying to really make what we have last to 2026.
Well, I didn't have this question prepared, but it just struck me that you're the VP of Exploration. You're a geologist. Normally, I speak to CEOs. So I'm just wondering, from your perspective, from a geological perspective, what has you excited about the Tetra zone and the JR zone, and what makes you confident that perhaps you'll be able to make some big discoveries moving forward?
So we're in the right area, right? We've went from triple R deposit discovery, which is really 5 deposits. And now you have triple R, you have NextGen's Arrow, you have NextGen's PCE, you have Paladin's Saloon, you have F4's Tetra zone and JR zones. Now you're looking at 6-7 deposits in this area. So each deposit that you find, you realize how good this is really for this whole district, right? And it increases your chance of there being even more things. I think that we have the best land position, in that area. I think we have the best technical team. We look at things in an unconventional way, which is how we were able to find things like this Tetra zone. And I think that's what gives us kind of value, is our willingness to look for anything. We think that you can find uranium in any kind of rock. We just are looking for certain structural settings. As the VP, that's what gets me excited, is that, the likelihood of us finding something else in this district with this team is very great.
Well, let's end by opening the floor to yourself. Anything that we haven't yet touched on, or anything you think it's important to emphasize the potential shareholders of F3 Uranium should be focused on?
I think that, in summary, it's a very simple story. It's that, we think we're the best team. We have the best ground. We're cashed up for this summer. We have one discovery that's brand new that we're drilling right now. We have a high-grade resource estimate 12 kilometers away of that. And I don't think that our current market cap takes into consideration these facts of when you compare us to some of the other companies around us. I think we're the best bang for the buck in terms of value. We're hoping to add more value to us this year. And I encourage anyone interested in more detail to just reach out to us, send the IR email, the IR contact and email. They'll pass it on to me, and then we can have a phone call.
Great. Well, I'll put a link in the description below to the F3 Uranium website. I'll put that email in the description as well, so people can reach out if they have any questions. Sam, great conversation. Thank you so much for coming on the show.
Thank you so much for having me.
Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.